right, so let's begin the show today, and we'll be talking about your investments in thematic and sectoral funds, considering that the market has been volatile and investors are still yet to figure out whether to make a new entry in the market or to have an exit strategy. So let's help you, because a lot of sector-specific and stock-specific action is already going on in the market. You, as a mutual fund investor, should you be looking at sector funds or thematic funds? Let's get on board. Shweta Rajani heads mutual funds, Anand Rathi Wealth Limited. Shweta, good evening and welcome to the show. So a lot has been going on in the market, but then for a mutual fund investor, do you think it's the right time to also look at sector funds or thematic funds, considering, you know, the few near-term triggers that we have, which is being budget and also the elections coming up soon? Although this cannot be the reason why you should be putting money in a mutual fund, considering near-term and short-term triggers, but then a lot of times what happens is these sectors give you a good move and uptick in your portfolio as well. Can you have the same kind of triggers and factors if you're a mutual fund investor?
Yes, Kavita, good evening. The point that you've brought out, a lot of the times, we often face these questions that it looks like, this is the budget allocation being made, and therefore should I buy, an X sector? Like, to give you an example, a few years back, the capital expenditure by the government had increased, and therefore people started buying a lot of, defense and PSUs in their portfolio. So it becomes, that can play an important role to your portfolio, to add that fillip in the return. But what becomes very critical is that you've done your study and you're tracking it very closely. If you are someone who's, spending most of your time a day studying a particular sector and companies within that sector, then sector funds are for you. But if you are someone who's busy working and making money and do not spend that much time in evaluating your investments, then I think the diversified fund route still, is the best option for you. So therefore, looking at the current events, could there be certain sectors that could play out? Definitely. But what is very important is timing as far as sector funds are concerned.
All right, but then also let's analyze the performance of a sector fund or thematic fund versus a diversified fund, because see, the main aim, Shweta, to have a fund in your portfolio and to earn profits is when your fund is beating the benchmark, if it's an active scheme that you've bought. Okay, so if your fund is unable to do that and give that money to you, it's really not right to have that fund or hold that fund for a very long time if it's been underperforming the benchmark itself. So when you pick up a specific sector fund, Shweta, when you pick up a fund of a particular theme, how would you like to compare their performance with the benchmark and also their performance with a diversified fund, if one has it in the portfolio?
Absolutely. I'll take a minute to explain the difference. When I'm saying sector fund, I'm referring to one specific sector. It could be a pharma sector and IT, but when we're referring to thematic funds, what we're generally referring to is few sectors put together and a theme playing out, like a PSU or an MNC or emerging markets. And then you have, diversified fund, which would have around 10 to 12 sectors. So that's the broad difference. One sector versus 3, 4 sectors versus a diversified portfolio of 10, 12 sectors, and the fund managers, deciding overweight, underweight positions there. If I just look at the trend of 2023, and I see, sector or thematic funds that would have outperformed their own benchmark, you could have somewhere around 70% of them beating their benchmark, beating Nifty 50. But on the other hand, if I am looking at diversified funds, I could have this number, which is 90% plus, beating the Nifty 50 benchmark. So clearly, in terms of probability of a diversified fund beating benchmark tends to be on the higher side, as well as when we're looking at alpha, if I put all sector funds together and if I put all the diversified funds together, diversified funds also have that potential of giving you a 3, 4, 5% extra return over and above benchmark more consistently than what a sector fund could give you. If I just rate it, then you're getting more flexibility, more active management in a diversified fund than a sector fund.
All right, so let's also talk about the sector funds or thematic funds which are really in trend these days. Although we are trying to understand, we are trying to help our viewers understand the reason why one should be looking at a diversified fund. But then we have a lot of investors, or maybe those kind of investors who are little learned experience in the market, would prefer sector or thematic funds. In that scenario, which are the running themes and which are the preferred sectors that investors are opting via mutual funds?
Sure. What we are seeing, positions being built up. Consumption could be one theme or sector, rather, I would put it that way. That is clearly a favorite sector. You could have bits and pieces of auto, where we are seeing, allocations going up. Within the banking, you have, banking and financial services. Generally, when you call it that way, you have PSUs, private sectors, you have insurance, all of it. So certain segments within that, themes being played within that sector. And of course, you have, capital expenditure or, some portion of industrials being played out. So clearly, to just give you a brief, we are a consumption driven economy. So that's expected to do well even this year. Government spending, government is looking at spending before the budget, 1 lakh crore was the number I looked at some time back. So that would boost consumption. So that's where, that theme. Banking is, like I said, most of the times a favorite because you're looking at private capex picking up, and that would give some fillip to the banking. So these are, some of the themes if I just put it in a nutshell.
Exactly. So when we talk about underperformance as compared to the benchmark, talking about sector and thematic fund as per the data that's given, Shweta, what could be the reason? Because we know that the strategy that one needs to adopt if you are in a sector fund, thematic fund, you need to know you should know the exit time. And obviously, there has to be a reason and a future growth trajectory that you might want to consider before investing in a sector or thematic fund. When it comes to them underperforming the benchmark, what could be the main reason over here, Shweta?
So what happens is, generally in a sector fund where you have limited choices of the stocks that you can invest into, you would generally find variation in returns also being on the higher side. So what that means is your outperformance also, you could have a super normal outperformance, and likewise you could have underperformance, which is super normal of an underperformance side. Just one way of looking at it is also the standard deviation of volatility. For a Nifty 50, it may be, or a diversified fund, it may be around 11%, but when it comes to a sector fund, it would be around 15%. So, the chance of going right or wrong, the impact of that is on the higher side. That's one reason why, we've seen underperformance tends to be more in a sector fund to its own benchmark also, because you have lesser number of stocks. Plus, the diverse nature of companies within that sector. Like, just to give you an example, within banking, if I'm looking at a Nifty bank index, I have PSUs as well as I have private banks. Both of them may perform differently in different market scenarios. So therefore, how you've built your portfolio versus how the benchmark is. There's diversity in the nature of the businesses of those companies that tend to lead to, if you're going wrong, you'll have a huge underperformance. So these are, I would say, two main reasons why we see a higher underperformance when it comes in.
All right, I think a lot needs to be considered before putting your money in sector or thematic bets, but one also needs to understand, Shweta, specifically, investors should not be treating their share investments in a particular theme with a mutual fund investment. I mean, there is difference between following a particular theme and a pattern for your stock investments, and there's a difference when you're buying a particular thematic fund. Shweta.
Absolutely, yes. Because, I'll just give you one example. You may be wanting to invest in infrastructure, and therefore, when you're picking up stocks, you'll end up picking, some of the capital good companies. But when you're buying an infrastructure fund, it's a theme-based fund or a sector-based fund. But then, what the fund manager is saying is everything that could benefit directly or indirectly from infrastructure will become a part of your portfolio. So what your expectation versus what your reality is could be very different when you're buying stocks and you specifically know the companies that you've studied you're investing into versus when you're buying a fund. That could lead to difference in returns, and that's where when you've identified a sector, you possibly just go and pick 2 3 companies within that sector rather than going through the fund route. If you're looking at mutual funds, then you go in for diversified funds where the fund manager is monitoring it and actively, will also churn the sector rotation.
All right, I think it's time for a quick break, and Shweta, we still have you on board because you need to answer our viewer queries post this break. And just in case you are watching us and you want to send us your question, you can WhatsApp your queries on our WhatsApp number and also email us your questions so that we can take your questions on the show. See you after this break.